channel. Mike, over to you.
Excellent, thank you so much. Good morning, everybody. Welcome to SBDC's Ask SBDC weekly small business town hall meeting. This is session number 60, where we're here to answer your questions now related to the disaster relief loans for both COVID and fires. We have Heather and Julie here from the SBA this morning, and we also have our CASE attorney partnership members here. We have Cooper and we have Katie here today to answer questions regarding corporate and HR law or employment law. And so again, this is our 60th week. So as introduction, we are the Northern California SBDC, and we are supported by the Small Business Administration and the state of California. And as a result of these contributions, we provide no fee advising for small businesses. You know, in our group here, the Finance Center, we focus on helping businesses access capital, and in this case specifically related to the disasters and things that are facing business owners in California. Scott Rogalski and Sunita Maharaj are our director and associate director who are normally on this call. They're both out today. My name is Michael Ballstad, and I'm one of the regional advisors. And for any questions that aren't able to be answered here, or for those that you may need specific individual help on, please feel free to reach out to 833-ASK-SBDC and ask to be connected to myself or one of my colleagues, and we'd be glad to help you in any way that we can. So for our agenda today, first we're going to have a disclaimer we'll get to. We're going to go over the parameters for both the COVID and fire EIDL loans. We're going to go through the payroll protection program required documents that are going to be necessary for the forgiveness process. Then we have Heather here is going to be going through SBA updates, including related to the fires. And then at that point, we'll bring our attorneys on board, Cooper and Katie, that will be joining me to answer any questions that you may have. Then at the end, we'll go over our upcoming webinars and question and answers. So our disclaimers are this: things are changing all the time. Congress just came back into session, so we may see some other different things happening, and none of those are recorded yet. So please be patient with us, because all the information we're presenting today was current at the time the slides were updated, and the last slides were updated this morning. EIDL is currently accepting applications for most businesses, including nonprofits such as 501c3s, 4s, and 6s. The EIDL Advance program has been closed. Those funds have been fully tapped out. But don't hesitate to continue applying for EIDL until they make the announcement those funds are still available for loans. And the PPP, that has been closed as of Sunday, August 8th, so no applications are being accepted for that program any longer. So at this point, I invite Heather's going to help. She's going to go through some of the parameters related to the economic injury disaster loans and what the difference are when you're looking at COVID versus the fire loans. And you are muted, Heather.
Thank you.
Thanks,
that darn button gets me. Anyway, hello. Thank you for having us on this morning. And we will be discussing the COVID economic injury disaster loan, as well as the current California fire disaster loans that are available. These are two separate programs. They are ran from our Office of Disaster Assistance. And with that said, with the COVID EIDL, there's really one set of rules, because that falls under the CARES Act and the mandates under that with respect to a streamlined application process. With the fires and the parameters around the economic injury disaster loan relating to the fires in California, there's another set of guidelines. And there are some similarities, but I will point out some of the differences. So with respect to the COVID program, there is on the SBA website a bar that runs across the top of the page. It's in red, and you simply would click on that to apply for the economic injury disaster loan for COVID. With the economic injury disaster loan for the fires, you can enter through the SBA website. From my perspective, I think the easiest thing to do is to go to sba.gov/disaster, and that'll bring you right to the page for the application process. With that, the disaster fire declaration, it's actually a presidential declaration, and the way that our disaster programs work is that we work hand in hand with our FEMA partners, the Federal Emergency Management Agency. That agency is actually the coordinating one that delivers assistance to designated areas of disaster. SBA supports them in that role with getting businesses back up and running, nonprofits, homeowners, and renters. So typically, with the Small Business Administration, we simply deal with business loans, and that would be true through the COVID channel. With the physical disasters, we actually can help homeowners and renters in those particular areas, and I know we've had several areas that have been very hard hit, unfortunately. Very similar to what we experienced in 2018, and we're just, keeping our fingers crossed and saying our prayers every day that this fire season does not get any worse. With respect to the physical disaster loans for a homeowner, we can supplement whatever an insurance agency or an insurance policy does not cover. So it wouldn't be in addition, an additional benefit to our disaster victims. It's a supplement of that insurance. So something really to kind of keep in mind. But the rates are extremely palatable for homeowners, and those are currently set at 1.188%. So again, those can go up to 30 years. We do take the real estate as collateral, and it's basically to assist a homeowner or even a renter to get back to pre-disaster conditions. With renters, we are limited to a $40,000 limit. With homeowners, it's a $200,000 limit. It does cover up to $40,000 in personal property in addition to the physical damage for the real estate. If businesses are affected for the physical disaster, we actually will deal with businesses of all sizes. So with respect to looking at some size standards that we would have on most of the SBA programs, those kind of are set aside for the fire disasters. With that said, we do take collateral, and you'll see on the screen here, we take collateral anything over $25,000. With respect to the economic injury disaster loan for fire victims, we would also take real estate if we're loaning the monies to rebuild that project. With the collateral on the COVID, we simply do a UCC, which is a lien on business assets, as well as a personal guarantee. So keeping that in mind. Our current limits on the economic injury disaster loan for COVID are at $150,000, but again, the fire can go up to $2 million with respect to businesses and nonprofits, and then up to $200,000 for homeowners and $40,000 for renters. The programs are repayable, so we do look to the applicant business to have a good credit history if there's some hiccups, and that's on either one of these transactions. If there's some hiccups along the way and they can be explained, please do so in your upfront application. And an example of that may be that there was a family tragedy or an illness that created some medical bills, and perhaps those went into collections. Again, I would strongly advise that you submit a letter of explanation for any of those hiccups, so to speak, and stating how they would not occur again. If you suffered a job loss or something along those lines, clearly that's another case to be made. But we really do, because we're dealing with taxpayer dollars, have to look at a borrower's propensity to repay their debts. So if there is just a track record of an applicant not repaying their debts, we're really not going to be apt to provide that loan. The other thing to keep in mind is that the proceeds for these, again, with the economic injury disaster loan for the fire, there is the physical damage and then the economic injury. With the physical damage, there's specific geographies that are aligned with where those fires have occurred. The economic injury could also be within those areas or the contiguous counties. And we do have a map. I actually will put that in the chat for you to grab that. The map will identify the counties that are involved in the declarations, as well as those contiguous counties, which would mean the surrounding counties that are affected. A lot of other counties that don't have the effects of the actual fire, such as, Placer County or Sacramento County up here in Northern California, where my district office is located, we are not necessarily affected by these fires, but the smoke has been horrible. So there's been a lot of questions of late from businesses that are inquiring about just by chance maybe a restaurant. And a restaurant, because of COVID, they're having to provide seating outside. And that was all great. It was a good option for them to reopen their business in light of COVID, but then they're having to deal with this smoke. And with those particular instances, unless it's an adjacent county to these fires, unfortunately, those are not in that declaration as of yet. So those declarations are updated on a regular basis, and we do send that information out. So you can always subscribe to our Gov delivery system. And the San Francisco District Office offers the same service, so something to kind of keep in mind so that you'll be updated on those programs. Again, with information for the COVID program, on the economic injury disaster loans, those are very streamlined and there's not a lot of documentation that's necessary. For the fire transactions, it is a fully documented file. So we would be looking for tax returns, pay stubs, again, copies of insurance policies, everything that you would have on a typical transaction. And we're happy to walk you through all of that. Can we go to the next slide, please? Okay, so with the Paycheck Protection Program, this is kind of switching gears here. And as Mike had stated earlier, the program did expire on August 8th, and until we hear otherwise, we are simply concentrating on the forgiveness aspect of the program. So a borrower who has obtained one of these Paycheck Protection Program loans would actually go to their lender that they initially applied to and advocate or request the forgiveness through them. That particular lender may have some specific requirements that they're asking the borrowers to come to the table with. From the aspect of proving what losses or what those dollars were spent on, there are 60% has to be spent on wages. So from that standpoint, the easiest thing for the borrower to provide is their 940s or 941s, which are the quarterly statements that a person or an employer would be reporting to the IRS. So the other 40% of the loan can be used for other services, mortgages, rent, utilities, etc. So with those particular line items, provide whatever you can. If it's a mortgage, provide the mortgage statement, a copy of the note. If it's a rent or lease payment, provide a copy of the lease, and then copies of prior year's tax returns if you are able to show that those have been ongoing. So utility payments, again, just utility bills. Julie, you can jump in at any time here and add anything that you see that perhaps we haven't discussed. I don't mean to put you on the spot, but.
Thank you. One thing I think is important to remind people, if you haven't checked the Treasury or the SBA websites in a while about forgiveness information, I do recommend you do so, because there have been some updates and there do continue to be some updates, not as fast and furious as it was when the PPP program was first launched, and there are some FAQs also. So in addition to the actual guidance documents on the PPP applications, there's a lot of interim final rules and some FAQs that you might find useful if you have some questions about your calculations or the process that this is going to go through, or looking for some more detail.
Mm-hmm. Excellent. Thanks so much. And again, a moment ago, I had stated that you would go through your lender that you obtained the PPP loan from to request that forgiveness. That lender, once you request that forgiveness and provide the updated documentation to them, has 60 days to review that information. They then will forward it to SBA for our concurrence. So there is quite a process involved in this. The sooner you can get started on requesting the forgiveness, probably the better off you're going to be. Once that determination is made, it does incorporate any of the principal and interest on that loan. So just keeping that in mind. I think that's it for our slides, Mike, or is there one more? I think, oh, yeah. So SBA Support, here's our contact information for our disaster center. The disaster customer service email is also available. You also, if you have been declined for the EIDL program or had some challenges there, that email, pardon me, for reconsiderations is listed there, pdcrecons@sba.gov. And then servicing of those economic injury disaster loans. The email is listed there, as well as the phone number. And as we stated, or as Mike stated, I am Heather Lutzy, the District Director in the Sacramento District Office, and I'm joined by my colleague, Julie Klaus, who is the Director of the San Francisco District Office. So we're available and willing and ready and able to assist you with any of your small business needs.
And I was just going to add one additional thing. There are some different points of contact for the wildfire disaster loan, and I'm going to go put those in the chat for you. So if you have a question that relates only to the wildfire loans, the physical loans, or that EIDL loan, we have a different phone number, hotline for you to call, and a different email address, and that will keep you out of the COVID queue, so to speak, and it's just for the wildfires. So I'm going to put that in the chat for you as well.
Thanks so much, Julie. Excellent point.
Heather and Julie, thank you so much for being here today and helping out our viewers. I'm going to go ahead and move on to our Q&A section. So this is the CASEFORCE disclaimer as it relates to our attorneys. These office hours are intended to be a resource for small businesses. Oops. My screen here is in the way of me seeing all of this slide. Sorry about that. These office hours are intended to be a resource for small businesses with fewer than 25 employees and nonprofits to learn information about various resources and legal issues relevant to the COVID-19 pandemic. They are not intended to offer legal advice, and the leaders of the office hours are not able to represent office hour participants as their attorneys. This session is intended to address issues related to the pandemic, and panelists aren't able to comment on general non-pandemic related issues. And I would just like to reiterate that. Normally we have a few people each session who will ask about some legal matters that aren't related specifically to the pandemic. And because of the number of folks that are on these calls, we really need to be very narrow on our focus of the topic. So also beyond the call today, there is a statewide small business resource guide that lists resources by county. Berkeley Law has helped with this. So that link that's there on the slide, we'll make sure is in the chat box as well, so that you guys can click and download. I would recommend downloading that, and they're updating that on a regular basis. Then also today's attorneys are Kate Tyler, who specializes in corporate law, and Cooper Spinelli focuses on employment law. Now, coming up, we have our Monday, Wednesday webinars. On the 21st, we have a disaster loan updates, and we have an HR advisor that's going to be talking about HR-related issues that have come up related to COVID, and maybe some, I would imagine some compliance matters employers are having to deal with at that point. On Wednesday, the 22nd, we'll have CASEFORCE as we do every Wednesday. On Monday, the 28th, we're going to have someone talking about credit repair. And then on Wednesday, the 30th, again, that's going to be office hours as it is today. And some other upcoming webinars would be on 9/17. We have setting up.
Well, do you want me to talk about these? I know these
well. Go right ahead. Go right ahead. Thank you.
So just to let you all folks know, we're continuing with our non-COVID, non-fire specific webinars. Most Tuesdays and Thursdays. So tomorrow we've got a Facebook Shop for Business webinar. So we had a webinar on social media selling back in, I think it was late July, early August. And most people were interested in that session in Facebook. So that's what we covered there. Mike, could you put the screen back up? Because I'm trying to read it from here. And then a couple of things around, we also have on the, let me just check the date on that. That would be the 29th. We've got one on Shopify. So how to set up a Shopify store. We've also got a couple of things around finance. So we have how to take care of your credit during a pandemic, and that's on the 24th. So if you're needing to, we heard just today about needing to have a good credit score to get your loans. So how you can keep that in good shape. And also we've got one on managing your cash flow. That's one that Paul Bazo's done. Very popular as cash is king, especially when there's all sorts of things like pandemics and fires messing with your business. So that's on the 1st. And then we have our Sean Barker, who's pretty much our e-commerce lead. We'll be doing how to start your business how to grow your business online and generate sales. And that's kind of set up already for the middle of October. And we'll be bringing more to the game. We're putting together our October schedule as we go along. You can keep an eye on all of our events by looking at the SBDC events /network calendar URL. And that's not just the regional ones, but it's also all the different events that are being put on by the different centers. And we are, there's something like 30 centers putting these on. And because it's COVID, almost all of these are now webinars, which means anybody can attend any of these from anywhere. So please take a chance to do that. If you want to keep it, you'll be getting e-blasts about this, but also we suggest if you follow us on Facebook. So if you have a look on AskSBDC on Facebook or Instagram, we keep information on there about what's going on there as well. So that's another great way of finding out what we're doing. So with that, I think it's probably time for me to hand back to Mike, who's going to start handling questions and working with our attorney colleagues. Mike, you're muted.
Every time. Thank you so much, Alan. Up here, I'm also just for the time being, I'm just going to go ahead and leave our different means of contact up here. Our toll-free number 833-ASK-SBDC, our website ASKSBDC.com, and our email address is both in English and in Spanish. And so with that, we're going to begin starting to take some questions. And I can't see from my screen, Alan, are the attorneys on with us right now?
Cooper's with us, but and Kate was here for a bit, but she's disappeared. So I assume she's had to run away, but she'll be back, I hope.
Okay, let me see what's going on here. I'm not, for whatever reason, I am, there we go. Wasn't seeing my Q&A bar. I'm having some technical difficulties this morning. All right, so I'm going to go through some of the questions. We've already answered a number of them in real time, but I see a couple of questions up here I'll go ahead and address. It said, in the last meeting, you recommended to wait to file the forgiveness application. Now Heather said we should do it as soon as we can, confused. So she said you should be preparing, and absolutely, I tell people if you're done spending, absolutely be putting all your information together in the application. You can certainly submit it if you like, but part of the discussion was that people were wondering if there were any new rules, like, you know, some people were talking about this proposed blanket forgiveness, some different forgiveness rules and such. And so we were simply talking about the fact that when Congress came back to the table, you know, they were going to have to go through some of these matters. So if you're completely ready and you've spent your money down and you've got everything documented and you're ready to submit it, certainly feel free to do that. Some folks are still deciding whether they're doing 8 or 24 weeks. Maybe they haven't gathered everything together yet. And if you haven't, Congress just came back into session. And so we're going to be seeing possibly some new developments forthcoming in the coming weeks. So we answered that one live. Next, it says, for PPP, what date did they change it to for the first payments to be due? So basically, they were giving the choice of 8 to 24 weeks. That 8 to 24 weeks is from the time of disbursement. So that's the amount of time that you have to fully spend the money in accordance with the guidelines that they've proposed in order for it to be considered forgivable. When you submit the application, basically they've got a period of time to be able to approve or disapprove forgiveness. So that would be through the end of this year. So you're going to have a number of months before they're even going to review the application and come back with a decision, at which point, if they haven't forgiven it, your payments would be due. So it's not going to be anytime soon. It says, if we send information to the SBA for reconsideration by email, how do we confirm that the information has been received? Should we also send a copy via mail as well? I'm only aware of using the email that Heather had provided earlier. Heather, do you have any input on that?
You know, I really, thank you for the question. It's a great question, but from my perspective, I would not do both. I think that it would muddy the waters. Quite honestly, send the email to the pdcrecons@sba.gov. I would estimate that you're going to wait approximately 3 to 4 weeks for that reconsideration request to be put through the system. You can follow up with your local district office, and we're happy to kind of track that for you. But again, there is a process, and the process is basically kind of a first come, first serve basis. Keeping in mind that the program itself had millions of applicants, millions. So again, it is a process. If you haven't applied and you're starting to apply, please make certain that you put accurate figures into the system so that we won't go through the issue of having to do the reconsideration. And if you need help with that, feel free to reach out to your local SBDC center, or your local district office.
Excellent. And since I've still got you here, Heather, I'd like to go over this one with you as well. Vivian states, I don't understand. If I get the PPP loan June 11th, I'm calculating that I will make it to the 24 weeks around November 25th, which means I should have used all of the money by that date and have 10 months max from June to apply for the forgiveness. Is that correct?
Correct, yes. Yes,
so basically, Yeah, so that is true, Vivian. That's what the timeline would look like. And the reason they gave that extension to the 24 weeks is there are a number of businesses that have had longer forced closures, and there's no way they could have spent it in 8 weeks. It just wasn't going to be feasible. So if you are using that 24-week period, you would just go through the proper measures to document what you've spent everything on, because you need to be able to support that. And then you would just at that time, begin the process of submitting your application for forgiveness consideration. Okay. Our local SBDC recently promoted a small business assistance grant program through the Santa Cruz County CARES Recovery Program. My business doesn't qualify as my business license is in Monterey County. Does anyone know if Monterey County has a similar grant program? I would say that for the time being, certainly call the 833 ASK-SBDC number, and an advisor can help you look into that. I would say the first thing to look at, though, Evan, would be the resource that I mentioned earlier, which is the CASEFORCE provided that downloadable document that has resources for all over the state. So you would be able to look by county.
Also, it's worth noting, isn't it, that whilst we know what's going on basically up to Santa Cruz, Monterey County is outside of our territory, so we're not as up to date on what's going on those counties as the Central California SBDC would be.
Good point. Thank you, Alan. It says, my client's PPP loan was rejected, never received response from the bank. Can we reapply with SBA for a PPP loan? Unfortunately, you can't. PPP is closed. I'm not sure why you never got a response, but there's no new applications being accepted for PPP. You can, however, apply for the EIDL loan on SBA.gov's website. If you have any specific questions related to that or need some help, please feel free to reach out to 833 ASK-SBDC, and an advisor would be glad to talk with you through that process. Okay. Let's see, I have, Vivian's asking, if you are a sole proprietor and didn't file taxes for 2019 because you didn't make enough money, can you still ask for an EIDL loan to SBA? Business has been operating for many years and still operating. Heather, would you have any input on that one?
So with the economic injury disaster loan, we basically look at the historic earnings of the small business to come up with the formula for the loan. Now, that said, if your business has been operating for many years, was 2019 perhaps an anomaly that brought the revenue down? In that particular instance, I would reach out to our office and have the discussion on how we should actually structure that application. So, but you're still eligible, as long as you're in business, you're still eligible for the economic injury disaster loan. I will point out, though, that the economic injury disaster loan is a loan and not a grant or a forgivable debt as the PPP is.
Excellent. Thank you, Heather. And if you need any help, like you said, you can reach out to their office. You can also reach out to SBDC, and we can help you specifically with your situation. And so for the time being, that is all the questions I'm seeing. Did I do one? Oh, another one just popped up. Great, we're getting some more questions. All right, so here we go. PPP, my fund ran out but did not get to restore full-time equivalents following the 60/40 guidelines. If my business closes permanently, how does this impact loan forgiveness? Well, the first thing I'll address, and I'm going to ask Heather to address part of this too, but I want to address the FTEs. So there was back in June, at the same time that they made the 8 and 24 week distinction, there was a Flexibility Act passed that created some exceptions to the FTE rules that related to whether or not, if you had employees that declined an offer to come back to work, those folks could be excluded from your calculation so long as you documented, for instance, via email, making the offer to them and them declining that. Anyone who declined the offer would be excluded from your calculation so long as you met the requirement of reporting that decline to EDD. And there are a couple of other exceptions as well. With regard to the closing permanently, Heather, can you address that?
So, I would love to, but unfortunately, we are still waiting for guidance with respect to the businesses that will not reopen or that do have an intention to close permanently. I would just advise you to continue to check the SBA and Treasury websites for updates. As Julie indicated earlier, there are updates happening through those channels. And with the FAQs on the Treasury's website, there are a couple of them that are pertaining to business closures. I'm not sure if they can assist you in your particular situation, but I would just say stay tuned.
Okay, excellent. And I have another one here too from Sam that says, for self-employed, I heard that the full PPP loan is forgiven without any proof. Is that correct?
That is not correct. The self-employed borrowers still have to provide the documentation just as they would to the IRS. So there are specific things. As Mike indicated earlier, I know that there is talk amongst our congressional leaders with respect to some PPP forgiveness. Unfortunately, that's not law yet, so we are not privy or not advocating that that's going to occur. There's still a lot of discussions going on in Washington with respect to how to utilize the rest of the funds that are still available, how to provide expedited forgiveness, etc. So unfortunately, we're kind of building the plane as we're flying it. And again, I would say just stay tuned for additional guidance.
And, and then just going back to that, all along the way, just as you would in any other area of your business, if you're preparing along the way, like your documentation, all of these things, if you're doing it along the way, at the time that you go to apply for forgiveness or any of the new rules pop up, you're not having to put everything together right at that point. It's just going to be smaller adjustments at that time, rather than dealing with, everyone's stressed enough already with everything that's going on. And if we wait till the last minute, that's just a lot more stress that we shouldn't have to deal with. So I would say just along the way, just do all of your documentation along the way, collect that in a folder. As many of you that I personally talked with when we were talking about the EIDL discussions, create a folder on your desktop, collect all your documentation there that's specifically for that, so that when it comes time and any of the updates on instructions come, you're prepared. Everything's there. Some of it you may need, some of it you may not, but at least, it's better to have more than less at that point.
Mm-hmm.
Okay.
Excellent advice, Mike. Thank you.
All right, thank you. Yes. So now I've got Graham and Dottie asked, if you lost money in 2018 and 2019, then grew your business, the COVID hit and dropped it down again, would this fluctuation block EIDL? So the degree I can speak to that is when you were applying for EIDL prior to the last iteration of the portal, or the most recent iteration of the portal, there were requirements that you would provide the last 3 years effectively of your financials. And really what the SBA is looking at is if you had a business that was a going concern already, you weren't, it wasn't the thing that you were just about to go out of business and COVID became a convenient way to finance your way out of closing, so to speak. So it's not that it would be blocking your ability to get EIDL, it's that your financial performance over time is going to really kind of create the formula that SBA is going to look at regarding the amount that it would take to operate your business for working capital and the ability of your business, more importantly, to repay it since it's not a forgivable loan. As self-employed, how do we document or prove that the wage is paid out to us? I would say that, if you're, paying you're just paying yourself out to another, checking account, you would document how you're paying yourself, and you would track those checks. Just, the difference is you're not doing it as payroll. You're not, doing your payroll deductions for an employee, but certainly you can track that from your business account. You're cutting yourself a check, and that, that will document, and you've got your limitations. You've got a limitation as self-employed on the maximum that you can pay yourself out if you choose 8 versus 24 weeks. And off the top of your head, Heather, do you remember what those numbers are? The 8-week number I know is somewhere just north of 15,000 that an self-employed could pay themselves. And
right, and unfortunately I don't have that figure right in front of me, but I would just like to reiterate something that you just touched on, Mike.
Yes. With
self-employed borrowers or sole proprietors, it's really imperative that you have a business account or a separate account for your wages. Do not commingle your business funds and your personal funds. It really muddies the water from any lending perspective. So regardless of whether that's PPP or EIDL, or you're going to get a traditional conventional loan, it's really prudent of you as small business owners to separate those finances.
Excellent. Thank you, Heather. And I have this next one that I think maybe, Heather, if you could answer, and Cooper, this might be something for him to address a little bit too. It says, for self-employed, if they pay themselves the entire PPP, do they report appropriate amount to EDD for PUA over 4 reporting periods or 5 reporting periods? So they're saying 8 or 10 weeks.
Mm-hmm. Actually, I'd rather leave that to Cooper. We really don't speak on EDD policy, and with respect to obtaining a PPP loan while getting EDD, we just want to make certain that these applicants are not double dipping, so to speak.
Right.
So Cooper, if you'd like to take that, I would welcome your opinion.
Unfortunately, I can't answer that one off the top of my head. That's a little outside my area of expertise.
Okay.
So one thing I might suggest, Lori, is if you reach out to 833-ASK-SBDC, we do have a couple of advisors that are HR focused, and they might be able to give you some insight. At least it would be a good starting point. Okay, on the next one, do we have Katie on the line yet?
Yes, we do.
Excellent. Hi, Katie. We have a question here. It says, can you provide any updates on COVID-19 commercial eviction moratorium in Alameda County that's due to expire September 30th?
Unfortunately, I don't have county by county information off the top of my head.
Okay.
But I would suggest visiting the county website because that's normally where you can find updates.
Wonderful. Thank you so much.
Isn't that information also in the resource guide?
The resource guide, yeah.
Excellent.
Yes.
So yeah, do visit
so
that resource guide.
The resource guide that goes out.
What?
Yes, there's a weekly resource guide that goes out that contains information on a county by county and city by city level. For Alameda County, it's likely that the county eviction moratorium may only apply to the unincorporated areas of the county, and you have to actually look at your specific city.
Excellent. Thank you for that clarification, Katie. So Marta is asking, so as a self-employed sole proprietor, I could pay myself from my business checking account where my idle money was deposited, and I can pay myself and deposit in my personal account. Is this an appropriate way to use idle money? So let me address the more important piece of that, which is idle is able to be used. It is more flexible than PPP from the standpoint that you are able to use it as working capital and for paying payroll. The qualification to that is it cannot be being used at the same time as PPP money is being used for payroll, because that would be double dipping. So long as during that period you were using EIDL strictly as the payroll for yourself, yes. And then you would just cut yourself a check as a draft. If you have an accountant or bookkeeper that's doing that, they're likely helping other clients as well that are doing that, and they would probably have a good handle on how to do that. But just however you normally pay yourself a draft, if you're paying yourself as a check out of your business account, that is keeping the funds from being commingled. It makes it much easier to track and just keeps it much more clean. Okay. Okay, Heather, I don't know that I'm totally comfortable with this, addressing this one myself. This is from Marta. It says, also regarding paying myself with my EIDL money, is it at my discretion what an appropriate payment amount would be per month? Or is there a specific amount that I can do to count as an appropriate use?
So under the economic injury disaster loan, there's not a mandate that the specific funds go to any particular allocation, whether that be payroll or inventory or working capital or rent or mortgage, whatever. I would just suggest that that you don't give yourself a large bonus, that you don't increase your salary above, you know, a modest increase over the prior year's earnings. I think that the economic injury disaster loans are supposed to be utilized to assist a business in getting back up and running after a disaster. And with that said, we would not want to see you, you know, give yourself a $150,000 bonus and then close your business, because we would consider that an inappropriate use of funds, and we would ask for those funds back.
Yeah, I would just, you know, I know a lot of the questions, I know a lot of people are you know, it's a lot of thinking. You're really just you know, looking at it from the start, just from a common sense standpoint, from a thought of what was the intended purpose of these loans. And we'll go back to that just for a brief moment. PPP was intended as a means to keep employees on the books so that the minute a business could reopen, you're not having to scramble to find employees. You know, the funds, either EDD is going to be paying unemployment plus the federal portion at that time, or they're going to be receiving it via PPP. The PPP basically keeps a ready workforce, which is going to minimize the downtime of our economy at the point a business can reopen. So that's the intended purpose. If you think about from that standpoint, the appropriate uses make sense. From an EIDL standpoint, the idea is, how do we keep a business in operation during a period, and we're kind of eyeballing 6 months of working capital is kind of how they were looking at what the size of that loan would be. The documentation they were asking for really looked at, what does it cost to operate this business? What is kind of the quote unquote cash burn, understanding that we don't have revenue coming in necessarily to offset those expenses. And without that revenue coming in to offset those expenses, businesses have very little in the way of reserves. In fact, there was a study recently that said the median number of days that businesses had in reserves of cash was 27 days, which means they'd run out of business in less than a month. So the whole point of these funds is to give the businesses a means to stay open as we look to reopen the economy past this. So when you look at it from that perspective, okay, this is intended to keep the business open and operational. Does giving myself a big pay raise or a bonus affect that? Well, no, it wouldn't. You're sucking the money out of the business and there would be nothing there to keep it open. So hopefully that makes sense. Okay, so this is one for maybe any of the attorneys would be able to address. What is the status of the state commercial rent deferral beyond September 30th, beyond whatever might be in the resource guide?
It's my understanding that there was an extension for an additional 5 months, I believe, but I think a certain percentage of the rent has to be paid to avoid eviction. So I'm
Okay.
sure if this particular individual were to Google it, they may find some updates online.
Okay, excellent. Thank you. And do you know, like, is there a particular agency or anything they may like look to if they don't see anything in a general Google?
No, I can't recommend anything off the top of my head.
Okay. All right. Thank you so much. Okay, let's scroll down. Okay, it says the resource guide does not provide the legal documentation we can use in discussions with landlords wanting full rent now.
That question isn't entirely clear to me, but if Julie is asking if there's something they can point to, given the particular city that they live in, I would go to the local city government website to find the order that bars evictions. And if she's asking what exactly you need to provide to a landlord who's requesting full rent, each city has its own individual requirements as far as what evidence is needed to satisfy the requirements.
Okay, excellent. Thank you very much for that.
Mike, this is Brett. If I could just chime in real quick. One of the reasons that there aren't more detailed items in that resource guide is that that kind of question, regarding a specific lease, are so fact dependent that it's not safe or really advisable for us or frankly for anybody else to advise on that in detail, because it really requires, if it gets down to negotiations with the landlord, it's going to hinge broadly on the contents of the lease and those specifics. I just put into the chat window a link to a resource called Start Small, Think Big, which is an organization focused on one-on-one counseling or direct representation for legal issues. They have an intake form that's pretty easy to get through, and they're, simply put, their model is a little bit different. We're trying to answer broad questions live and hope that that's helpful. Their focus is on matching individual inquiries with individual attorneys and then having short consultations to talk about this kind of very detailed question and really look at the actual underlying documents and see what's best. So I might refer the questioner and others who are interested to that resource for some direct representation.
Excellent, Brett. Thank you so much for that. Okay, so I have a question from Joe. Let's see. Joe, I'm going to just paraphrase some of it, but one thing I would say is, in looking at this, feel free to call 833-ASK-SBDC on this particular one and ask to be connected to me. I'd be glad to counsel you on this. But this is one where they basically said they received some money from EIDL, said they can't receive more due to credit history. Credit score was great until March. I would like to relocate after some downsizing to another state. Filed for unemployment, and after contacting EDD, learned they will be receiving $167. The rent is $1365 a month. Let's see here. Actually, you know what? Actually, none of this really is going to relate to much of the way of other people. I was just going to say I saw the credit piece. I would say that for anybody who's looking at the credit, the slide deck does address the fact that there is a credit improvement webinar that is going to be conducted on one of the Mondays that they can help you with the credit improvement. Joe, I would just say, like I said, reach 833-ASK-SBDC, ask to be connected with me. I'd be glad to set up with a session and work through these things with you. Okay, so let's see here. Tim is asking for counsel. How are the courts interpreting if customers or employees contract COVID and assert that it came from my business? While it's hard to prove, California has interpreted for, and I'm not sure what WC is, that it was applicable. I'm sorry?
That's workers' comp.
Workers' comp. Okay, gotcha. Thank you. Is applicable to employment. The insurance liability policies generally exclude pandemics. However, recently reviewed my policy and see no specific pandemic exclusions. Advice on navigating this quagmire.
I can comment on this. So this is for Tim. This is $1 million question. It's not clear yet how courts will be interpreting, how broadly they'll be interpreting workers' comp exclusivity, which is generally the defense when an employee is injured in the workplace, and then the employee, or if the employee happens to die, their surviving family files various civil claims and tries to seek a lot of damages. Usually the employers assert workers' comp as a defense, but as it relates particularly to COVID, we're just not there yet to give an assessment on how courts will be interpreting it. There is going to be a lot of litigation. There's already a lot of litigation in the pipeline, but it's just starting. A lot of wrongful death cases against employers, employees who have died, or at least as the complaints allege that employees died because they contracted COVID in the workplace due to allegedly the employer's negligence. Going forward, what I would advise generally is making sure that you're following best practices. So if this unfortunate situation were to arise and you do face a suit, that you at least have some other defenses that you follow, best practices and the recommended guidelines from state and federal OSHA.
Excellent. Thank you so much. Okay. Let's see. For the owner of an S Corp that has not historically been on payroll, can they add themselves to payroll and then use PPP proceeds? Will this be forgiven? The owner has been doing the work of former employees who have refused to return to work. So a couple of things. First, on the S Corp, Heather, I mean, my thinking on this is that they, since they're not on payroll, they wouldn't be able to pay themselves through that. Is that correct?
That's the way that I was just looking at that question as well. But I think what's more concerning to me is the second part of this, that the owner has been doing the work of former employees who have refused to return to work. A couple things to keep in mind here is if you have employees who have refused to return to work, and we saw this a lot with the supplement of the pandemic unemployment insurance, because they were making more money on unemployment than they were with actually working. So what you really need to do in those instances is to document that you have offered them their jobs back, document that they have refused, and that can be in the form of an email, as long as there's some type of written documentation and it's not a jotting down after you've had a verbal conversation. It really, really needs to be in writing. With that said, the other thing to keep in mind is that you can always contact EDD and let them know that your employee has refused to return to work. So that will sever their unemployment. Again, the unemployment intent, and again, our attorney partners could perhaps speak on this as well, but the unemployment intent was to supplement wages and not to be a replacement of those wages. So that's kind of where I'm looking at that one. With respect to the S Corp owner not previously paying himself, I think that you could probably make a case for it, but quite honestly, I'm really ill-equipped to say a yes or no that would be okay for you to start paying yourself. I totally get that if your employees aren't returning to work, you're having to step in and do those things. But from my perspective, I think that we would have to have the historical earnings of the payee. So again, we might have to follow up on that particular instance.
Exactly, because I know that just purely on the owners not being on payroll is the issue. Now the question becomes, if they put themselves on payroll, well, it would offset some of the lost employees. So yeah. Right. So what do you think our next? What do you think the next step would be for us to try to get an answer for him?
I am happy to run this up the flagpole and then circle back with the SBDC so that on your next presentation you can provide an answer to this.
Excellent. Thank you so much for that, Heather.
Right.
Okay, we are next
And
one.
Brian is one of our regulars, so I suspect he may be here next week as well. So it's one of the
Excellent.
seen a few times.
Excellent, thank you.
I'm conscious of the time. We are hitting 11:35, which is, I believe, when we were expecting to have closed 5 minutes ago.
Yes. So what I would like to do, I'm glad that you know, we've had so many participants today, and we do want to get to all of your answers. So our commitment is that all of the unanswered questions we will get answers to, and those will be either posted on the site or they will be presented at the next CASEFORCE meeting next week.
Okay. All right. So with that, thank you very much for Mike for doing a fantastic Scott impression today and running the event. Thanks, Heather, and obviously Julie, who's run away. Cooper and Kate, thank you very much, our attorney partners, and Brad. Thank you, everyone, for your questions and your input, and we will see you at, well, same bat channel, same bat time for one of our few upcoming events. Thanks so much, and keep safe, everybody.
Thanks, everyone. Have a great day.